Hi, welcome. It's Mary Ellen McGonigal with your weekly Edge show for Friday, May 27th. Today, as usual, we are going to go ahead and take a look at the broader markets. Where did we close the week? Are we looking constructive after last week's sharp rally? And then some of the more impactful news that drove price action higher last week. And then last up, viewer question of the week. It's all about capitalizing on the current rally that's taking place in this market, and I will provide some stock ideas there as well. So let's go ahead and get started with the news from last week. And first up, the Federal Reserve, their FOMC meeting, they did release the notes from their recent meeting from about a week and a half ago. And in those notes, it was shown that the Federal Reserve governors are all on the same page, united in a front to stop this high inflation. And that in turn was very calming for the markets to know that the Federal Reserve is in place to take action. Inflation has been a key buzzword in a negative way. So that was one of the pivotal news items that came out on Wednesday afternoon. And then today on Friday, another very positive development where core inflation, that inflation we've been trying to fight, it did come in lower than expected. And this is the CPE index, the Consumer Price Expenditures, and it's the most closely watched gauge of inflation for the Federal Reserve. So the fact that it came in lower than expected was cheered and the markets rallied. And in other news in the markets last week, we did see the US dollar continue to decline as interest rates also pulled back. That was quite impactful for the markets. Certainly a pullback in interest rates helped growth stocks advance. Last up is what we can anticipate next week in our holiday shortened week. Consumer sentiment is going to be released, industrial production, and then also the unemployment rate is coming out on Friday, another inflation gauge, if I may. So that will be closely watched as well. So from here, let's go ahead and take a look at the S&P 500 to see where we closed for the week. And here we are with the daily price chart of the S&P 500. Very significant rally last week, up more than 6%. These outside momentum indicators, your RSI has turned positive. It had been negative for quite some time. That's certainly constructive. And then your faster moving stochastics are in positive territory as well, up above that 50, that neutral level. Yesterday, on Thursday, we did experience what is called a follow-through day. This is a system that I've been following for many years. William O'Neill founded it based on studies going back over many bull and bear market cycles. Coming out of these corrections and out of a bear market, this follow-through day system has identified every market bottom. That said, not every follow-through day works. It did take place on Thursday. We had a nice continuation rally today. So of note is the fact that we also had a follow-through day back here in the end of March, which unfortunately did not carry through. So you will want to stay on top of the markets. For those of you that want to be alerted to any potential shift, you can trial my MEM Edge report using the link below, and that's what my work is all about, as well as identifying stocks poised to benefit. We're going to share some of those today. And digging in beyond the broader markets, we want to take a look at those 11 sectors in the S&P 500 and see where they stack up relative to each other. So this is a 2-month daily price chart view of those sectors. I've gone ahead and put the sectors in descending order according to that relative performance. And first up, energy, as usual, it has been in the forefront for most of this year. And then from there, we can see some defensive areas remaining up at the forefront, and that would be utility and healthcare stocks. What I'm going to go ahead and key in on today are some of those sectors that had relative outperformance percentage-wise relative to the S&P 500. First up here is financials, up over 7.5%. We can see a very sharp rally here. Nice positive momentum indicators, black line up through the red, RSI in positive territory, certainly constructive. From here, let's go ahead and take a look at another area that outperformed the broader market, and that is technology. From here, I'm going to share with you those sub-industry groups that performed better than the broader markets within technology. But again, very encouraging that we are seeing movement out of these groups coming off the bottom. It does, of course, remain to be seen if we have a nice continuation rally or if news halts it, similar to that March period. Another group that is worth noting that had a significant gain last week were REIT stocks. And not the prettiest of charts, but certainly worth noting that REITs, after this period of consolidation, are rallying. This is all about lower interest rates, which are positive for those stocks. So let's move on, take it a bit further, and I'll share with you underlying industry groups that historically are very impactful to the broader markets. First up, Brent crude price remains elevated. It's up here above that 115 level, and that is good for oil stocks, which again were the top performer this week, or certainly among the top performing. And then of note here, let's take a look. Semiconductor stocks. I mentioned that technology stocks fared well last week. Here we are with a view of SOXX. That's the ETF for semis, up almost 8%, poised to break above that 50-day. Nice outside momentum indicators in positive territory. However, we do still have more work before turning bullish on the semiconductor space. Another area in technology that had an equally strong, actually not as, but a strong week, and that is software stocks. Another area where it had a period of consolidation from which it is potentially reversing. So we are going to keep our eye on this particular group to see if growth stocks can add on to this week's rally. So from here, I am going to go ahead and share one other metric of note, and that is looking at participation in this rally, particularly within the NASDAQ. That's where these growth stocks reside. We're on the lookout for that group to potentially come back into favor. So this is a weekly view, and this bar is telling us into the close this week what percent of stocks in the NASDAQ are above their key 50-day simple moving average. So we closed with 21%. Might not sound impressive, but we did get down into single digits earlier in the week. And then if we compare it to the market bottoms that were marked coming out of the 18 bear market, as well as the 2020 bear market, we're currently at that same level in that 20 range. So that's certainly good news as well. From here, the question is which stocks or what areas are better poised to participate in the current market's rally and new uptrend. So from here, I will go ahead and share some stocks that look compelling, bearing in mind that they are shorter term trades as the longer term uptrend has not yet been confirmed. First up here is Home Depot, and we can see the stock, very similar to a number of growth stocks, has sold off very sharply. This week, the stock did close above this 50-day simple moving average. Your RSI is positive. Your MACD had a nice positive crossover. From here, we can look for the stock to potentially rally from this current 308 level up to its 200-day moving average at 343. This is the next area of upside resistance, so we will be keeping an eye on this name. That's in the consumer discretionary area. Moving right along, we can take a look at a stock that is in the healthcare space, and there were a number, certainly in these larger pharmaceutical stocks. This is Johnson & Johnson. The stock had a significant uptrend March into May, pulled back, and then this week is in the throes of forming the right side of a base. On the lookout for a potential base breakout here at about 186. Your RSI is positive, and then you had that nice positive MACD crossover. And then last up, taking a look at a stock in the technology space. We talked about semiconductors a little early in the advance, but I am keeping this on my watch list. This is Advanced Micro Devices. This stock has broken back above its 50-day simple moving average, RSI and MACD, both in positive territory. From here, I am going to be on the lookout for this green 10-day to cross up above this 50-day simple moving average, this red line, and that is known as a bullish cross, and that could confirm further upside from this 103 level up to 117. That's it for this week. Everyone have an incredible long weekend, and I'm going to look for you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.